Welcome back to the Daily Trading Journal. Super excited about this week's trading. It has been crazy out there. Yesterday and today, tons of stocks halting up, so much price action. I would say it's probably because of the holiday weekend, the short trading week that we are having. Obviously, I'm pretty sure the market will be closed on Thursday, and so it's just been crazy, and I'm excited to get into the journal. But first and foremost, as always, this is for educational and entertainment purposes only. For the legal disclaimer, I am not a certified financial advisor or certified financial planner. I do not recommend that you follow my trades or follow even any of my techniques, because trading is risky, and whenever you put money on the line, make sure you are only trading or investing with money that you are willing to lose. If you don't feel like you want to get out and learn for your own and trade on your own, then I recommend finding a certified financial advisor or certified financial planner to help you with your investments. But for me personally, I spent many years with a certified financial advisor and certified financial planner, and I just felt like I wanted to know more about what my money was doing in the market, and which is what kicked off the journey of learning how to trade. And so that is what this is. This is a journal of the musings of my mind. So let's get into it. Now, first and foremost, what a week it has been. One thing that I want to say first before I jump into this, though, is if you are considering trading or learning trading, 100% start a trading journal. For me personally, I think while speaking, and so this trading journal on video helps me to reflect on the day, helps me to reflect what I did good, what I did bad, helps me to talk through it, and gives me new insights and realizations as I am thinking about the trades that I just did. One thing that I often found before I started this journey of actually understanding how to day trade, before I started reading books upon books about trading and about trading psychology, was that I would make a trade, good or bad, and I would forget what happened. And this trading journal, whether you want to do one, on pen and paper, or do a video, or do a podcast, or just record your voice, it helps you really digest what just happened. And one thing that the Daily Trading Journal pointed out, or Daily Trading Coach, definitely recommend this book, was that good and bad lessons not reflected on are not learned from. And so last week was a really bad week. I know I really continue to emphasize that, but it was a terrible week. And it was because I did not properly assess what I was doing. I did not properly assess the trajectory of my plan. I had an idea and I just went at it without thinking about the ramifications or what I had learned up to that point. I simply had an idea and I thought, hey, I'm going to try this. And I fell flat on my face. I am a trader that trades primarily pre-market high gap and goes. So basically, a stock sets a pre-market high. We can use PALI as an example of what I traded today. We'll kind of scroll right down in here. So a stock sets a pre-market high. This was a 324 off of the 226 of the previous day. And then what I'm looking for is this stock to break through that pre-market high right here. This is where I'm looking for. I'm looking for this breakthrough that pre-market high. Okay, so this is the setup that I like to trade. Now, most of the time, this setup cracks off and falls flat on its face, just like it did here today. As you see, it shot way up and then just cracked down. And so for me, I am a very quick trader. I am in trades usually less than 10 minutes, anywhere from 30 seconds all the way up to about 10 minutes. Those are my best trades. Anytime I hold on to a trade longer, either it makes a nominal difference or I lose. And so last week I was trying to hold my trades longer just based off a hypothesis that they might go up, based on the 10% of stocks that do continue up that are gap and goes. But for the most part, the gap and goes that I'm trading are making big run-ups and then crashing off. And so that's what I need to focus. If I want to learn a new strategy, then by all means, I should go and study for a new strategy. I should go back to trading at one share positions on that strategy until I learn what that strategy means. I have really honed in on the gap and go strategy, and so this is where I need to focus on what the strategy actually is, not what I want it to be. Okay, so that is what I recommend, and because of these journals, I'm able to. So I recommend making your own journal. And because of these journals, I've been able to really mentally work through a lot of the struggle and victory that I've seen while trading. Okay, so PALI today, wow, what a ride, what fun. Oh my goodness. I've yet to have so much fun trading as I have yesterday and today, especially coming off a really rough week last week. Okay. So PALI was a gap up overnight. It gapped up from 220. Like I said, it gapped up from about 220 up to 322. And then it was kind of just hovering along VWAP. This is a really good sign for me as a gap and go trader. I want stocks that are near VWAP, usually stocks that gap up and then start fading away from VWAP, as in start breaking down. Usually don't make a strong recovery. And if they do, it's usually not till the afternoon. I personally find my best trading from about 8:30 Central Time, market open, till about 9:30 Central Time. Like that's like literally my trading time. So in an hour, I could be out. And my goal for the day is usually to be green at minimum. At maximum, I want to be at 10%. And then anything above that is just like confetti in the air. And this was a confetti in the air kind of day. All right. So the market opens and we see a nice pop above VWAP here. And I was like, man, this is looking really good. So I went in right here on this candle moving above VWAP, got it in about 309. And then we saw a 3-candle pullback. This made me nervous because I saw a slight dip below VWAP at 299. I like to hold my positions, my position entries. Sorry, I like to cut my risk and cut my loss usually at my entry. That is my goal because I want to cut losers as fast as possible. And so I saw it dip. It kind of bounced a little bit here. And then I went ahead and got out at 302, right at this red candle. I was just like, man, this isn't holding strong enough above VWAP. I'm already in below the pre-market high. I like to get in a little below the pre-market high and then move through with volume. And it was just not a lot of volume. It was really fading. It was a really nice fade, bad fade, should I say, down. Then it perks up. And I was like, oh man, like, should I go back in? But I didn't want to get stuck in a tap trap. And so I didn't go in. But it perks up, and then it just ripped. So it rips up to 364, then 375, and halts at 375. And I was like, dang it. I was so mad. So it halts at 375 for about 10 minutes, opens up, and immediately shoots up to $4. And it was my plan to get in. I was like, I want to get in on this action because it's got strong momentum, a lot's going on, I'm getting in. So I got in with a starter at $4 of 10 shares. It started moving faster, and so I got in with 100 shares at about where was it? Let me check. I think it was 460 maybe? Hold on one second. Fade. Let's see what I got in at. So I got in with a starter at 4, I think it was almost 4 flat exactly. And then, where did I get my 100 in? So bought in my 100 at 438. So, excuse me, I went in at 406 for my starter of 10 shares, then got another 100 at 438. Technically 439. It was 438 and 93. Okay. So from that point, let's fade back over. From that point, it ripped up to 503, halts again. I was like, woo. At this point, I was stoked. Now, a little disappointed because right now I could be up like 60 some percent. And I think I was up like 28% or something, which is just phenomenal. It's still absolutely fantastic. And I'm going to talk a little bit about not getting too greedy, and that's where I'm most successful. Okay. So halts up, another 10-minute halt, opens up again, and then shoots up to 540, and then shoots up to 630 and cuts back really hard. At this point, because of how gap and goes have worked, we're up $4 a share right now off of yesterday's baseline. So in my head, I'm thinking, I got to get out. There's no way this is moving more. We saw 3 halts. 375, 503. No, we saw 2 halts, 375, 503. After that second halt, we're getting dangerous, especially that we're up $4 a share, right? And so I'm like, okay, it's time to move on. So I start selling slowly, incrementally. So I sold my first I think I sold 60 shares at 565, then 530, and then ended up selling the rest at around, I think it was around 510 or something. And so it was just a stellar trade. It was awesome. It felt great. It was in my plan. I had no doubts about this trade. And that is where I want to be in my trading. I want to get those fast momentum, high volume movers that are moving through the pre-market high and moving up very quickly. Capture the move, the brunt of the move in that, 10 to 20 minute range. Because it halted, that added time to my trade, but I was technically only in while it was live for about anywhere from 3 to 5 minutes, because it moved up so quickly it halted. So I was technically in the trade around 23 minutes, but it wasn't live that whole time because it was being halted up. Okay, so what I was going to say earlier is my initial entry was 310. Okay, and I could have claimed 83% gain on this trade, which kills me. But then again, I followed my rules, and that was so important to me. So let's look at this here. So I got in at 309, and it poked up, but started to pull back. I know that if I do not cut my losses quickly, I am very guilty of holding a loss longer. And I'd rather be out of a good trade than in a bad trade. And so I cut my loss, and then it ended up turning around and ripping up. Totally fine with that. That this happened and I got out and I didn't get in until the first halt, I'm completely fine with, because I followed my rules. I cut my losses quickly. Now, did that injure me and I missed out on 40% of the 40% of the move? It did. But in the long run, there's enough trades that go bad and that actually cut back and don't perform the way that this one did today, that having discipline is more important to me than capturing an extra 40% of the move. I'd rather have the stock confirm what it's doing than guess and be right this time but wrong next time. My goal is to be green on the day. My goal is not to hit 80% on the day. That is just a bonus of trading well. 80% is a bonus of trading well. 39%, I think I ended up 37% because of that 3% loss. 2%. 39% is just icing on the cake. The cake to me is slow incremental gains. If I so happen to get in a trade that runs really far, fantastic. But I don't want to abandon my rules in hopes that I'm going to get a big runner. I want to make sure I am so diligent about cutting my losses quickly and taking the predictable part of the move. And that's exactly what I did in this trade. And I am super happy that I did that. Disappointed I missed out on the 83%, but it would have been, to me, I would have gotten lucky. And right now in this trade, I know that I did my due diligence to cut my losses quickly. And then once it proved itself, I got in at the first halt. Noticed, took a starter, didn't take a huge position, didn't get greedy. The starter proved the hypothesis. The bigger entry followed through for the profits. So that is, I'm very, very happy with how I traded today. I did not trade to make money. I traded to trade well. And that is so important to me. And that's what I encourage you to do. Like, again, trading is very risky. Don't trade with money you're not willing to lose, but trade with a solid plan. Trade with what you know is going to work and develop that for yourself. Don't follow what I'm doing. Maybe learn a few things. Like I said, this is for educational and entertainment purposes only, but you have to develop these things on your own. Last week I had a ton of losing trades, and those losing trades helped solidify what my winning trades look like. And so, I mean, I lost $80 of P&L last week, but that $80 was the best $80 I spent. I mean, I couldn't have learned that pain from a course, right? Courses are very valuable. Watching YouTube videos are very helpful. But again, it's taking those losses, then getting in your journal and analyzing what you did. Like on Sunday afternoon, I took the day to write down exactly what my worst trading setups contain and what my best trading setups contain. and I really fleshed it out. Like I finished trading on Thursday, and I took Friday and Saturday to kind of mentally mull over everything that happened to then write this out so I know what I'm looking for. Kicked off the week very strong, and I'm very happy about it. Now, the goal for the rest of this week, which would technically just be tomorrow, is to be obsessive about only entering my best setups like PALI today. That is the goal. I do not want to enter anything that is not perfect according to what I know I can trade well, because I'm up, what was yesterday? Let's see here. I'm up, 19% yesterday, 37% today, 56% on the week. I think that's my best, that might be my best week ever. And so for me, pursue good trades, but protect profits is kind of like what I'm trying to keep in mind. Like if I'm only pursuing good trades, then I'm protecting my profits, because this was a perfect setup for me. All right, I'm not going to mull on too much, but I will recap what I did well today. I cut my losses quickly, even though it damaged me and I lost 40% of the move. I value more obeying my rules and guidelines than I value that 40%. Still traded that once it broke through the pre-market high. So it confirmed to me that this is a stock moving up with a lot of volume. There were no strong ceilings as far as resistance levels. It was way clear of the resistance levels that it could have run into. Let me show you what I mean. So let's see if you can see this. Yes, you can see this. All right. So if you look here on the 3-year chart, it was moving above all these key resistance levels. So this was a key resistance level at 343. As soon as it cleared that, it had to make another clearing of 467, and then it had just a ton of room to continue to run up. Now I was watching it here at around that $6 point, and I thought, okay, here's a candle, a big candle that could show a lot of resistance, and it did. And so as you can see, 639 was the cutoff point, but then this 556, right there about the 556 range, this range here, I was worried about because that was a big candle that got stuffed there. And so I had a feeling that this was going to be a really strong key resistance level, and it proved to be right because it broke through these pretty quickly, but then this gave it some trouble, and that's where I thought, okay, the exit must come now. So anyway, again, just trying to study and make sure I'm not getting into things blindly, but I am looking at the overall behavior of a ticker, and that's what I did today. Okay, the third thing would be to take the predictable part of the move and don't stay in too long. Did that. I was very happy about that. And then lastly, don't re-enter after the volume has subsided. So that's something that in the past I've had a bad habit of. And so the backside of the move is often tempting because it looks like you're getting these little pop-ups. But let me show you here. So this was the predictable part of the move right here. These really big candles with this volume. And then it comes down on the backside of the move. And then it's just going to, it's going to look like it might pop up right here, right? So it's like, oh, we're getting a nice green candle. It might do a reversal. But look how small, how low that volume is. It might reverse. It might run up to $7 today. But I'm not going to try and predict that. I'm going to take the predictable part of the move and move on. But I mean, yeah, look at that. That looks like that looks like an awesome candle, right? It's poking up, giving us a little bit of volume. But still, it's nothing compared to the volume of this morning. And that's what I like to look at. I want to be when it's at, $1 million, $1 million trades per minute. That's what I'm looking for. Shares traded. So again, like that could move up for sure. It's totally possible. But I want to be in the predictable part of the move. I don't want to be guessing on the backside of the move. So again, that's what I'm focusing on going into tomorrow. I want to be hypercritical of my trades tomorrow. do not want to give back any profits. I want to end the week strong, proving that I'm following rules, looking for my patterns and plays, and respecting the profits that I've taken. Don't take them for granted. All right. Thank you so much for watching today. If you've enjoyed this, definitely subscribe. Trading journals happen 4 days a week here, and I'd be happy to just have you comment below, learn alongside of me. But again, please learn for yourself, make your own trades, and only trade with money that you are willing to lose, because trading and investing is always risky. I'll see you here on the next video.